CNBC TV 18, celebrating 15 years of leadership.
This one. Hello and welcome to Markets Today. I'm Lata Venkatesh in the Mumbai News Center, and that's Surabhi Upadhyay joining me from Delhi. Both of us have broad smiles. In the past 1 year, we must have celebrated all-time high days for the Nifty about a dozen times. But every time, it is a new high and gives us a high. It was one such day today, 500 up on the Sensex, 150 up on the Nifty. A great day, wasn't it, Surabhi?
Absolutely, Lata. And the manner in which this rally came about, it was, it was completely a one-way move. Afternoon onwards, we just went higher and higher. Let's quickly run through the top stories. It's bulls in complete control. Markets hit fresh all-time highs. The Nifty trades above 8,700 and ends just a whisker below that mark with a gain of 1.7%. The Sensex surges over 500 points to hit an all-time high of 28,830. Blue chip stocks see big buying while mid-caps underperform.
Banks support the market's mega move. HDFC surges 6%, while private banks Axis, Yes and ICICI also support strongly. Metal stocks surge on better than expected Chinese GDP data. Heavyweights like RIL and ITC also chip in.
Mid-cap index manages just a 0.4% up move in trade today. South Indian Bank loses 4% on weak Q3 numbers. Tata Teleservices, meanwhile, rallies over 7% as CNBC TV 18 learns that Telenor is keen on buying a stake in the company. Logistics stocks like Gati and Gateway Distripark see some brisk buying as well.
All right, those were the heady headlines, and here are a whole host of guests whom we have lined up on the show for you today to talk about the stellar rally. Robert Parker of Credit Suisse Asset Management Company, Anup Maheshwari of DSP BlackRock, Sanjay Dutt of Quantum Securities, and Nandan Chakraborty of Access Capital, and more.
But before we get to all that opinion, let's take in what has been an absolutely breathtaking day. Another record-breaking day on the Lal Street. Bulls went on a rampage from the word go as major indices hit those historic highs in trade. Anuj is now here with the day's trading action. What a day, Anuj.
Well, what a phenomenal day for Indian stock markets today. Both the Sensex and Nifty hitting all-time highs. In fact, the Nifty hit it first at around post-noon time. And at that point, the Sensex was still 300 points from all-time highs. But by closing, the market had another 350 point rally on the Sensex, and even that hit an all-time high. But today was a day of blue chips. All the big blue chips rallied in trade today, and mid-caps underperformed quite a bit. Advanced decline was at about 1:1. But that's fair because the mid-caps have outperformed so much leading up to this charge that really the day belonged to the large caps in trade today. And look no further than HDFC. That was your stock of the day, up 6% with massive volumes. ITC, ICICI, Reliance, Tata Motors, Axis, HDFC Bank, Infosys, Bharti, Larsen & Toubro. Really, you can go on, and there were a lot of index stocks gaining with big volumes. Apart from that, metals also had a good day, so there was a feel-good factor in global markets as well. Sesa Sterlite, Tata Steel, Hindalco all looked good in trade today. So the short point is that we are back at all-time highs, and the market is now really convinced, so traders are really convinced that the pre-budget rally is well and truly on, and really you don't want to put any numbers on the Nifty or Sensex in terms of where that they would be ahead of budget.
Take your point, Anuj. This was a cocktail waiting to happen. When the first oil price cut came in, there was a feeling that will it last, and now it looks like it is going to be there for some time. To it, you add the heady cocktail of a rate cut and a pre-budget rally, and this kind of a breakout from the old ranges was always waiting to happen. Why this day, we can't quite say. What the dealing rooms tell us is ETF-related buying came in. There was a bit of a method in the madness. Quality was chosen. For instance, the Bank Nifty rose. It's up about 1.9%. But look at the CNX PSU Bank Index. That's up only 1.4%. So clearly there was a preference for quality, which is, of course, the private banks. Likewise, even within the smaller stocks, look at the stocks that have risen. Gateway Distriparks, it was always expected to do well because there is a subsidiary that it will list shortly, or so it is believed. CCL products again rose because the results were exemplary. As well, you had, housing finance companies believed to be the best bet in and in and under a government where affordable housing will be the hallmark and rates are falling. So you saw not just the big boy HDFC, but Indiabulls Housing and a whole lot of retail lenders like Axis Bank doing very well. Again, Axis Bank, Yes Bank, you can see the preference for quality. Again, lack of quality got punished. Look at the way you saw MMFSL. Again, should be logically a beneficiary of lower interest rates, but getting punished 4% lower simply because the NPLs could not be pardoned. Likewise, companies like REC, which have some troubled borrowers, did not find the same favor that retail lenders like a Yes Bank and an Axis Bank saw. So there was definitely an accent on quality even in today's all-round rally. My only area of discomfort is the metals. I mean, globally, the metal space is hardly the space you want to be. People are fleeing those stocks. Today, there was a bit of a double advantage going for them. One was the Chinese data that seemed to indicate that perhaps the worst is over for metals. And secondly, of course, we had a CNBC TV18 exclusive about which we will tell you that the steel ministry wants some more import barriers for the local steel companies. Both that helped the metal stocks rise, but that is an area perhaps people would want to tread with some wariness.
Point absolutely taken, Lata. In fact, let's see, we'll get Nigel in a little later. Maybe he can explain whether the metals move was more short covering, more of a trading bounce, or was there some more meat to it. But for now, time for some market opinion. Robert Parker of Credit Suisse Asset Management says that investors are much more positive on India, and now forecasters are looking to up their growth estimates.
Well, if we compare the Indian market so far this year, we're up, as you well know, just over 4%. So that actually makes India, you know, one of the better performing markets worldwide. India clearly is one of the major beneficiaries from the decline in oil prices. This is going to be a boost to growth. I think investors are much more positive on the growth outlook for India now. And generally, forecasters are upgrading their outlook for GDP growth this year to well above 6%. Emerging market performance has been very divergent. And, you know, obviously the theme in 2014 was the very good performance with one or two exceptions like Korea, but the big outperformance by Asian markets. And it wasn't just India. We obviously last year, you know, had this very strong performance from mid-year onwards by the Chinese market with, you know, continued strong performance by markets such as the Philippines and Indonesia.
Right. We'll get you more opinion, but for the moment, let's get across to Nigel D'Souza to get all the action from the futures and options space.
Well, it was a splendid trading session, and just looking at the options data, that's telling you that now the range for the Nifty has moved higher. So just looking at the 8,200 put as well as the 8,300 put on both those two strikes, we did see shedding, while we did see a fair bit of action at around that 8,500 put. Then we saw 8,600 put as well become fairly active, and towards the second half of trade we saw the 8,700 put. That one was getting fairly active, and remember the premium over there started the day at around 150 rupees. It ended the day at around 70 bucks. So in the near term, that 8,600 level should serve as some kind of support for the Nifty. Take a look at the call side as well. The 8,400 call as well as the 8,300 call, we saw shedding on both those two strikes, while some out of the money call buying made you big money. So the 8,800 call over there, we saw the premium move from around 13 rupees all the way to around 36, 37 rupees by the time we wound up. Individual stocks that went focused, the big leader was ICICI Bank. Fresh buying was seen on that counter. Axis Bank as well as SBI. On all those three banking stocks, we saw big buying, while the metal stocks, they've been getting pounded. Today they came in for a short covering bounce. So Tata Steel saw a short covering bounce. Sesa Sterlite as well as Hindalco, all of them came in for a short covering bounce in today's session. A couple of other stocks on the broader markets saw shorting pressure, the likes of Mindtree as well as Mahindra Financial Services.
Nigel, so we know it's been a massive move. We're talking 600 points on the Nifty in just the last 9 trading sessions alone. Take us through which are the stocks that have actually led to this massive performance.
That's right. The Nifty is up close to around 600 points just in the last 9 trading session. But take a look at the Bank Nifty. That's put on 1,500 points. A big run being seen over there as well. Cement stocks, they've led this rally. So the likes of Ultratech Cement, ACC as well as Ambuja. big gains between around 12 to around 16%, but the heavyweight gainers, they're catching our attention. So you just look at it, the likes of HDFC, ICICI Bank, L&T as well as HDFC Bank, all of them are giving you gains in excess of around 8 to around 14%. In fact, HDFC is the big gainer there. It's up close to around 14% odd. The banks and financial stocks, they have kept pace. So the likes of IDFC, Axis Bank as well as Kotak Mahindra Bank, all of them are giving you gains in excess of 10%. But just take a look at the screen now. You'll see that these other Nifty gainers, it's a mix of high beta as well as quality names. So you have an HUL in there, while you even have stocks like DLF that have gained close to around 8%, or even Asian Paints is in there with a gain of around 9%. So a mix of stocks up there for you on the screen. The IT stocks, they as well have done quite well, rather silently, because the likes of HCL Tech is up close to around 12%. TechM, Wipro, as well as Infosys, post that big run we saw after its numbers, that stock as well has gained close to around 8% out. Auto stocks, they're up between 8 to 13%. Tata Motors, in fact, is up close to around 13%. That's up for you on the screen. The mid-cap gainers as well, they're catching your eye. India Bulls Housing Finance, Sun TV, HCI, a couple of stocks that haven't moved in ages. Both of them, in fact, have gained between 17 to 18%. Kansai Nerolac as well, on the back of falling crude prices, that stock is up close to around 15% plus. So clearly, it's been a big bull run for us in the last few trading sessions. The Nifty up 600 points, Bank Nifty 1,500 points. No complaints.
No complaints. Agree with you, Nigel, on that. Well, let's get another market voice in. Our market master for the day, Anup Maheshwari of DSP BlackRock, expects the market to do reasonably well this year as well, on the back of an uptick in earnings.
As we get into this earnings uptick, logically, we should see markets doing reasonably well. Even if markets were to move in line with earnings, that's still quite reasonable. And more importantly, for domestic investors, the choices are very, very limited. So even sort of a 15% annualized return, which is what we normally is the standard indication for equity markets long term, looks fairly good from current standpoint. So we're entering the year fairly positive. 2 quarters ago, people were still looking at maybe 13-14% earnings growth, are more likely to be maybe closer to 10% again. But that's sort of a year that in another 3 months will be done. I think if we look beyond that into FY16, we're looking at it being definitely a superior earnings year, more in the region of 17 to 18%. And, more importantly, while, the absolute earnings number may show some downgrades, but the breadth of results is actually improving. So the overall, it's what we're trying to see, what we're beginning to see right now is there are fewer number of companies impacting the earnings growth number overall, rather than it being spread across a wide range of companies.
All right, let's move on to earnings now. Kotak Mahindra Bank's third quarter numbers came in more or less in line with estimates. The bottom line was supported by a strong jump in other income, while net interest margins came off just a little bit. Asset quality, however, remained intact for the bank. Ekta Batra now joins in with the details. Ekta?
Well, overall, it was a steady set of numbers that Kotak Mahindra Bank delivered this time round. The NII growth of 16% versus estimates of a 19% growth. Profit growth was past expectations. It was 36% versus estimates of around a 29% growth. Now, the reason for that was because provisions were down 57% year-on-year, and other income was a strong 65% growth, led by fee income up 45% and treasury of around 118 crores for the quarter. Asset quality stable. Gross NPA at 1.87 versus 1.89% sequentially. Net interest margins were a little below what the street was working with. It came in at 4.7% for the standalone as well as the consolidated business versus a range or an anticipated range of 4.8 to 5%. Now, in terms of the consolidated business, the NII was up around 13%, profit up around 21%. Kotak Securities and Investments saw a profit growth this time on a year-on-year basis, whereas Kotak Prime profit was down around 2.4%. A little sluggish on a year-on-year basis.
All right, let me get you some more market opinion on that note. Sanjay Dutt of Quantum Securities gives you a reality check. Says that while the bull market is at play on Dalal Street, there are a number of issues that still persist.
We are in a new bull market. It's just that in the immediate short term, I was a tad bearish a few days back, and that's why I'm caught on the wrong foot. Problems haven't gone away. Fundamentals and earnings and numbers and balance sheet issues, domestic companies haven't gone away. It will take time to set right. But I feel the prices and the indices obviously have run up ahead of the fundamentals. But, that's what bull markets are all about. You can't really game the last T, or you can't game the last 100, 200 points. The rally is not really across the board. The whole market is not on fire, and you are only seeing pockets that are showing strength right now. So it's not that, you got very wide retail participation, which spreads out to, stocks, 2,000-3,000 stocks, which is typical of, the euphoria, the real bull market that one has experienced in the past.
All right, time for a break now, but coming up, more market perspective and also a mood check from the dealing rooms.
CNBC TV 18, celebrating 15 years of leadership.